Putting on a brave face, but everybody's nervous as a long-tailed cat in a room full of rocking chairs. Let us see if we can ease that a little bit. We've got the editor-in-chief of the Kobeissi letter, Adam Kobeissi. And Adam, let's just start with your most recent post. By the way, I love your post. I love your work. You know that already. Happy New Year. Let's just start with this. February 2023, we're talking about the Fed, right? Wants to see unemployment higher, raising interest rates into a recession, using a recession to lower inflation due to policy failure. Man, you're giving it to him. Drives the majority of price action in the markets, and this is the part I love the most. These are the exact opposite reasons that the Fed was formed. I mean, what the hell is going on?
Yeah, I mean, Charles, what's happening is the Fed, they acted really quickly during COVID, and you can't blame them. No one knew what was happening during the pandemic. But we've kind of been behind the eight ball now ever since. They're playing catch up. And it's become clear that, a recession is basically one of the only ways that we're going to get inflation down quickly. And that's why the Fed they literally said at their last meeting, we want unemployment to be higher. They said at their December meeting minutes last week that they don't see any rate reductions in 2023 at all.
Here's the thing, though, Adam, and you pointed out in that tweet, right?
Yeah.
So the Fed was created in 1913. Yep. And they promised the world we would not have these crazy, wild gyrations. I don't think most people know. Before we had the Great Depression in 1800s, they used to call them depressions, right? There was a different term for it, not depressions. But anyway, there were four of them, just as bad as the Great Depression. They said we'd never have them again. Of course, that's all we've had, and it feels like they're the ones who are engineering this.
Yeah, no, absolutely. I mean, the Fed has said that a recession is the best way, or perhaps the quickest way to tame inflation. And now you have a slowing economy, and we're raising rates into that slowing economy, and it leaves a lot of uncertainty on the table. And honestly, markets continue to look for this reason for a Fed quote-unquote pivot. Why would the Fed pivot? They've said they're not going to reduce rates until there's a clear path back to 2% inflation.
I think that, to be quite frank,
it's a tough market.
The market also, this is the same Jay Powell that said there was no, that the inflation was transitory.
Absolutely.
Also, the Fed has come to the rescue since 1987. When Alan Greenspan, a month on the job, became the maestro. And they love those accolades, man. Yeah. Plus, they love all the money they make when they
Yeah, and people are saying the new Fed inflation is transitory call by the Fed is now this no rate cuts in 2023 call.
Let's talk about the bear market then that we're in, right? So these are some of the most difficult trading conditions we've seen in years. Bear markets, they want to confuse you. Bear markets want to trap you. Bear markets want to run without you. Yep. You must remain objective and manage risk when markets become like this. How do you do that?
Yeah, for sure. So, look, when markets are going straight up, it's easy. You just buy and hold. Anyone can do well in a bull market. But when markets turn down, it's very hard to kind of eliminate the noise and just stay focused on what's happening. So, right now, sentiment is all over the place. People don't really know where to look. We're looking at technicals. I mean, that's always a roadmap. We look at technicals. And then when it comes to fundamentals, you need to eliminate the noise and just look at a few of the key fundamentals. Pick two things that you're following. And then from there, what we recommend to subscribers, in terms of our fundamentals. Right now, as you know, it's the Fed and what's happening with this recession.
Right.
That's what we're looking at. Right. And also, we urge our subscribers, look, if you're a long-term investor, we're actually starting to see some bargains now. Some of these stocks are down 70% from their highs. So have your risk profile, have your time horizon in mind, and it becomes a lot more clear.
This gets to this part. The stock market has had every reason to break lower. That's the technicals you're talking about. 3,800 is it's been huge. We'll see if it holds. Maybe over 4,100 you start to nibble because you says when markets look for a reason to rally, they will find one. Could it be 4,100, 4,200? What on the technical side could be our buy signal?
Right. So as you mentioned, we've been actually in a 100-point range for over 16 days now. But we saw a break above that range yesterday. We got bullish this week for that reason. And markets it's this whole Fed pivot narrative. On the December jobs report last week, we had unemployment down to 3.5%. Right. We saw a strong beat on the jobs number. But markets rallied because wage growth slowed a little bit.
Right.
So they're looking for a reason to rally. We think this technical
that wage growth was a big drop, though. That was one of the lowest, weakest wage growth. And by the way, those beats, I'm telling you right now, they're BS. You don't beat 9 times in a row unless analysts are deliberately putting in low numbers so that you can beat. I think the market's sniffing it out.
Yeah.
Either these analysts don't know what they're doing.
Expectations are debatable, for sure.
Right.
But also, the Fed made it clear. Unemployment is what they're watching right now. With 3.5% unemployment, I mean, that's historically low unemployment. It's hard to see a case for the Fed to start cutting.
Wages go down, participation goes up, get long this market. That's just my own personal opinion.
We'll see how it plays out.
Man, thank you so much.